Thank you for joining me. I'm Alexandra, and I want to talk about Facebook, or I don't want to talk about Facebook. So I wouldn't invest in this company, not just because of recent events, but also look up what happened in Myanmar, and yeah, it's kind of not something that I think helps the greater good. But here we are. So what they do is memes, cat videos, lots of stuff right now. So obviously, they just run a website. That's basically their whole business model. Current stock price $264, which gives them a market cap of $753 billion. Revenue is $86 billion, earnings $29.1 billion, which gives them a PE of 31 and a forward PE of 25. Revenue is up $15 billion, and it's been up $15 billion for the past 3 years. So while that was 30%, it was way more than 30% in the beginning. Currently, not so much, but I mean, if they could get the 15 billion per year going for indefinitely, that would certainly help. Dividend is zero. I don't expect that to change for so many reasons. Total assets $159 billion, total liabilities $31 billion, which gives them a total stockholders' equity of $128 billion. And generally, a nice balance sheet is between 3-to-1 and 2-to-1 assets to liabilities ratio. 5-to-1 is too high, but seeing how Facebook is not a retail business and it's not a manufacturing business, I don't know how they could invest money better to benefit growth. So overall, I'm really not sure what they could invest this money in. Maybe other companies, I guess. Risk factors. Seeing how Google has tried and failed to disrupt Facebook, I really don't think that currently anyone's able to. So really don't think there's any risk factors right now. That could change in the future, but I think that they're currently more worried about regulatory pressure than they are about competitors. So maybe Chinese companies getting into the market worldwide would be a problem, but I don't really see that happening as well right now either. So for a growth investor, I think the $15 billion of growth that they had consistently had is not really enough anymore. Right now, that's under 20%. So not really the growth you were hoping for, and especially when the growth is slowing. So I think there's probably better opportunities out there. For a dividend investor, obviously, there's nothing here. For a value investor, the balance sheet is quite nice, despite too many assets, really. On the other hand, 128 billion is also just like 15-18% of their market cap, so it's not really that significant either. The PE is slightly too high, and I don't really think that the business is as stable as it pretends to be, I guess. So overall, I think that for a value investor, there's also better opportunities elsewhere. So I think that at this price anyway, there's better opportunities out there for everyone. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.